Why do we look at the cheat sheet? We look at for clear upcoming tradable opportunities. And on Friday, November the 22nd, there was one clear opportunity we're looking for, was if we saw a breakdown in sentiment for the Eurozone. Now, markets have been very keen to sell the euro. The dollar had been finding significant strength. And if we saw any further reasons to sell the euro-dollar pair, it was reasonable to expect a flush lower as markets were heavily biased towards selling the euro-dollar, and even more reason to do so would have just given them greater confidence. So we were looking for PMIs that started weaker, and we can see here the French PMI prints. If they came in below these numbers, 43, 48.6, 47.2, we could expect euro-dollar sellers at market. And if we just take a look at the print that we saw those PMI prints coming in below market's minimum expectations across the board. That opened up a clear sell bias in the euro-dollar pair. Ideally, would have liked to have seen the German data all surprising below market's minimum expectations as well. But you can see the whole swathe of data was very negative towards the Eurozone sentiment, and that opened up a clear euro-dollar sell bias. And if we just take a look at the euro-dollar pair, you can see out of the French data, which was released earlier at 8:15, we saw a clear opportunity there. That could have been an opportunity on selling the actual data release. And we can also see that there was potential opportunity with the weak German data to have carried on maybe a little bit longer in euro-dollar selling. And later on in the session, there was an update to the cheat sheet looking for opportunities to sell the euro-dollar. You can see here the cheat sheet. Just looking to shell the euro-dollar with 104.50 becoming a key level for sellers after that weak tranche of data that was released on the cheat sheet, giving us a euro-dollar sell bias. And in one of the webinars that we were running, we were looking for a breakdown of a pullback. You can see you have a pullback here. And then on Friday, there was looking for opportunities to sell from this very simple broken trend line up to that 104.40, 450 resistance. We moved back up there, and then as soon as we broke lower, that was a clear opportunity to sell the euro-dollar pair for another potential short-term opportunity, even if you missed the whole move. So that's why we look for these short-term trading opportunities. They don't come up very often, but when they do come up, they're worth pouncing on, they're worth looking at, because you have a high probability of the instrument under question moving in the desired direction. So don't forget, this is why we look at these economic calendar events. You don't get many of them each month. In the month of November, we've only had 2 opportunities at the time of making this video. This is at the start of the 25th of November, but there's been only 2 opportunities, but this was one clear one. So let's look for the next coming week as we head into year end, and we've got some decent calendar events coming up for the month of December that are definitely worth keeping our eye on. So as we come into the first week of December, what's really catching our attention? The first thing for us to look at is the Swiss CPI data that's coming out on December the 3rd. Now, if you take a look at recent Swiss inflation prints, you can see that the SMB, in one sense, can be relieved that inflation is well within that 2% target. However, what the Swiss don't want to see is a deflationary period coming ahead, and a number of SMB speakers have been reminding markets that negative interest rates could be back on the cards for the SMB. So what we're looking for here is another opportunity to potentially sell the Swiss franc if we see CPI data coming in below market's minimum expectations. Equally, if it comes in above market's maximum expectations, then we could see some of that sort of dovish Swiss franc move get priced out. But right now, markets are beginning to anticipate or contemplate the prospect of maybe negative interest rates from the SMB again. It's certainly not inconceivable, and it's certainly something for us to be looking at. And you can see October's print came in, surprising markets at 0.6%. There was a nice flush lower on the Swiss franc on that. So definitely worth looking at as we approach the Swiss CPI coming this week. Definitely one not to miss. Another key data point is coming out of the US. Now, we know that the Fed has told us they've got a twin mandate: stable prices, maximum employment. they're increasingly confident that they're managing stable prices. Now, there is, the argument goes on, is inflation being managed? Is it going to return, etc., etc.? Broadly speaking, the Fed are happy that inflation is moving in the right direction. There's been the odd blip, but that's the broad outlook. So it means the labour market remains super important. And in the latest FOMC minutes, the the minutes said that some Fed members said they could accelerate cutting interest rates if the labour market started to show signs of weakness. So the ADP jobs, very important at 1:15 on Wednesday. Now, last ADP print saw a really stunning number. Now, for October. Now, just because the ADP comes in strong, it doesn't mean the NFP will come in strong, etc., etc. But it does set the mood. So we'll be looking very carefully to see what the mood is on Wednesday in terms of how the US labour market is doing. There's been conflicting reports around, and I'm reading a number of analysts are sort of, well, particularly ING was sort of suggesting that the explanation for the last weak non-farm payroll was that there was strikes, there was hurricane issues, and they downplayed that. So it'll be interesting to see how the private labour market is doing. And US ISM, always worth looking at. With the US a service-led economy, how the ISM prints for the services data will be very important. So we'll be looking at that on Wednesday too. Friday, it's the non-farm payroll. And of course, everything we said about the ADP is relevant for the non-farm payroll. And of course, what markets want to see is, was that weak print in October really due to Boeing strikes and weather-related issues? Or is there beginning of a slowdown in the labour market? Now, but the Fed are trying to work out where the neutral rate is. They recognise that rates are still restrictive. But the question is, if they become too restrictive and you start seeing the labour market get very weak, then they're going to speed up the path of interest rate cuts. So we could see some moves lower in the dollar if we see a big miss to the downside. And there's been a lot of dollar strength recently on the Trump trade, tariffs. The recent Fed pricing has changed, with the Fed communicating that they're less keen to cut rates than maybe they were 4, 5, 6 weeks ago. That's resulted in quite a lot of dollar strength over the last few weeks, certainly since the beginning of September, end of October time. And everything, all things come to an end. Is that move overdone? Well, certainly if we've got a big miss in the non-farm payroll on Friday, we could see quite a flush lower in the dollar, big flush lower in the dollar yen, maybe a bit of recovery in the euro dollar, although I would favour dollar yen over euro dollar with the state of the Eurozone at the moment. However, that's the top 3 events that we're looking at for this week. We'll update the cheat sheet with the specifics of what to look for. Hope you have a very good trading week, and I look forward to seeing you. Don't forget, webinars are running each day, and you can discuss longer term outlooks or any specific issues in the webinar, and we'll be running through the risk events before time as well in those webinars. So hope you have a very good week, and speak to you soon.